Hello everyone. Thank you for all for taking time today to join today's webinar. It's not late to me to wish everyone Selamat Hari Raya. Hopefully this year celebration are even better than before. So without wasting any time, let me introduce myself first. I'm Farid Zikri, Muhammad Zulkifli, dealer representative at the Berjaya Security. Okay. So today we'll be discussing about the IPO analysis. So based on the title is what to look for in a good IPO. In this webinar, I will you through the essential criteria and benchmark for evaluating the IPO. So for the next slide, I put the disclaimer first. The view and content shared in this presentation represent only the personal opinion of the speaker and are provided solely for information and educational purpose. None of the content or opinion expressed, including any company mentioned, should be construed as a buy and sell recommendation, nor do they constitute any form of financial advice or investment solution. Before making any investment decision, please consult your investment advisor, such as your remiser and your dealer representative. Investing in the Malaysian stock market is involved risk and all investment may result in losses. We encourage people to conduct their own due diligence and seek advice from a licensed financial advisor before making any investment decision. The speaker and related parties shall not be responsible or liable for any losses or outcomes arising from the use of this content. This content has not been reviewed by the Security Commission Malaysia. So we go for the next slide. So today is the webinar for the IPO, right? So maybe someone asks, what is an IPO? So an IPO is the acronym for the initial public offering. So it's the process where a private company offer its share to the public for the first time on the stock market. Once the company share can be bought or sold by the investor on the Bursa Malaysia. So meaning to say, if there's a private company, I will give you the example, like the company A who want to get the fund, and then instead of the making any loans from the bank that may occur them to get the higher interest, so they will go for the IPO to get the fund from the public. So this fund is maybe it can be used to them for expand their business, such as buying machinery, building factories, constructing a new office, or exploring a new market Normally the IPO is normally focusing on the expand their business. So maybe you're asking what makes an IPO special. So why do some people focus so much on the IPO? Just look at the performance on the IPO in 2025 So there was a lot of IPO listed on the last year. So I go through for the last year performance first before we go into for this year. So we can see there is a lot of IPO losses, a lot on their first day listing. So I give you the example. You can see 98% on the first day listing for the copy, and SET 41%. So there was IPO that rose more than 50% just in the single day. So you can see the 2026 or this year, we can see the IPO performance is still there. It's still a good one, because we can see the SunMed last listing is the Sunway Medical. let's say if you get the allotment for the Sunway Medical and sell at the opening or closing, you still make the profit of the 70%, 17%, sorry. But I just want to put a disclaimer for you guys lah. Sometimes people assume IPO are money machine for the investor, but based on the table that I share to you, not really IPO are make rise on the first day listing. There's a lot of IPO suffer in the losses or for the first day listing. So we go for the next slide. So why did some IPO rally on the first day listing while others did not? So basically, the influence for the price movement for the IPO is based on by this supply and demand. For demand is influenced by two factors lah. First is external factor and second one is the internal factor. For the external factor, it can be triggered by microeconomic factor. If the sentiment market is good, the market IPO will good also. Example I give to you, I take the list this year listing lah. For example, is Kimi. You see the Kimi the issue price for the Kimi is only 38 cent, but on the first day listing for the opening price only, they managed to up almost 107%. So if the closing price also up more than that, so the highest price is for the closing price is the 128%. So why the Kimi make this a good profit on the first day listing? So I can say it's about the microeconomic also like the global, because at the time the people are more focusing on the AI. So Kimi is have the backup from the SolarVest, and they also have I can say a rumor lah that have benefited from the AI data center. So like the same thing like to ISF, they are up so much on the first day listing. It's also related to the AI data center because as I said, the macroeconomic is one of the factors that influence the IPO price lah. And then we go next for the government policy. So government policy, okay, for the government policy, if the IPO is benefited from the government policy, it will be rise on the first day list. I give you the example. We can see that let's say if the government make the policy like the subsidy or maybe some incentive, so we can see we really can see from the last month where did the government give initiative to Maisara 100 ringgit to the Malaysian citizen. So at that time it boosts our consumer product. So consumer product have the extra one ringgit money to buy for their groceries. So let's say like if there is IPO is related to the consumer and may benefit from this government policy, you have a good sentiment for this IPO and a good demand for the IPO because people tend to look for because this IPO will help them to boost their revenue and profit because there is a demand from the consumer to buy their product. So that's why you can see for the last month, consumer stock rise a lot because of this government policy lah. So and then we go to the market player. So for the market player, let's say lah, there is a debut for the biggest and the biggest IPO. I can see the biggest IPO in this sector lah. So I give an example. If there is one of the listed company want to go in the IPO and they are the market player for the industry. So people or big investor may look for this company because they are the leader, and then of course they are performing well. So their growth is there. So it can boost their can boost the confidence to the people to look for the IPO. So next we go for the internet factor like the company fundamental. For the internet factor, we just go through for the company fundamental only. So basically for the company fundamental, we look for three points. First is the business model, financial health, and anchor investor. For the business model and the financial health, I will explain more detail on the next slide. So I explain first on the anchor investor first lah. So basically, what is an anchor investor? Anchor investor is like the big player or at the a big investor who behind this company. So I give you the example lah. Last year there is a IPO that we call it Orcam, who listed in the Bursa, listed in Bursa Malaysia. So they have their anchor investor or cornerstone investor that call it PMB and also Equinas. So basically this company is back up from the Equinas. Equinas have a lot of the position in there. So you can show that this company is very stable and have their growth factor lah. So it can open the eyes for other investors to jump in for the IPO. So that's why we can see the IPO have a good movement lah in the first day listing. So next we look at the supply. Basically for the supply is unchanged. So let's say like if the total share is 1 million, so the total share is just 1 million lah. So there is no adjustment except they do the what we call it the private placement or something else. So next we go for the example of the hot demand and the low demand IPO lah. So this is example for the high demand IPO. You might be curious what the table is this. So this table is the allotment table for the IPO lah. So I accept for example, for your information, the allotment will be disbursed by tier of the table. You can see 1 to 9, 100 to 900, 1000 to 1000 to 1900. So basically, they are do the balloting based on this tier lah. So as you can see, the higher tier you apply, the higher chances you will get the allotment. So you can see at the lowest, I can see the lowest 100 to 900. The success rate for the public only 5% only, 5.63%. If we compare to let's say lah 10,000. 10 million share. The success rate only 81%. So meaning to say the highest tier you apply, the highest chances you get lah. So basically in there, we can also identify whether this is a good IPO or not. If the So as you can see, I can classify for the low tier like the below 100K is the most of them is the retail lah. So if the retail success rate is the highest than big investor, so I can say the panic sell on the first day listing will be occur lah, because normally for the retail, they only do for the short term trading. They will sell off their position in the first day listing. Is different from the cornerstone big investor or institution investor. If you can see the success rate is there is a lot of the big investor apply for the SPO and their success rate is very low. That means they are still compete each other, and then you can see that this IPO is very high demand as a good IPO lah. So you can expect the price for this IPO will be up more and more lah, because this group have the potential to grow more, and there are big investor are believe for this company, because their investment decision is not for the short term, is based on the long term. So this is this is the first way how to determine whether this is a good IP or not. So I give you the low demand, I will give to you the low demand, the example of low demand IPO lah. So you can see for the public allotment balloting result, we can see their success rate is very high. So that means a lot of people who apply for the SPO will get the allotment for the share, and the number of successful application for the what we call it, the big investor also high. So that means there is no they are not compete very too well. So we can expect this IPO is not really good. So that's why this IPO at the first day listing not really up so much lah. Next, we go to the next slide. So this is the criteria that I used to identify quality IPO. Okay, I forget to tell you that the highest chance to get the IPO is really sure that the IPO is very good lah. So we moving forward. The criteria that I normally use to identify the quality IPO is I use the 4 factor. For example, first is the business overview, and then is utilization of proceed, financial, and the PE ratio. So first and foremost, before identifying if this a good IP or not, we need to know what is their business is. This is where for me is a very important part, because knowing business overview before applying for an IPO help beginner avoid risky investment by understanding what the company actually does. Knowing this help invest have knowing this information help a beginner answer one main question: what am I buying, and this company really likely to grow, and is this a good business to go for the long term, and is this company can sustain more in the market. So it will help you to research more and know more about this IPO. So of course we want the good good uh, business sector, right, to invest in the company to make sure we're not losing the money. So before that, so next we go to the understanding their business overview. So I will show to you how to find this information lah. So basically, I use the Sun Medical as example for the newbie. If you don't know how to get the prospectus for the company, you may search the Bursa website, and then you click to company announcement, and then you find out that company that you want to search for. So I use the Sun Medical as example. So I search Sun Med. And then click search and then find the table for their IPO listing. So I will click this one because this is mentioned about the IPO. Next we go to their prospectus. So basically you can first you can open for this prospectus first, and then find the business overview until you get at this page. Yeah. So I go to the slide again. So as I mentioned before, I use Sun Medical as example. Yeah, I think most of the people know that Sun Medical, they are running private hospital, and there is a lot of media cover that this IPO is so biggest IPO after the 99 speed mark. But we need to still go through for this. I think you already know what they do, but you still need to go through for their business overview to get the better picture for this IPO. So what is matter first is to understand what they do. After that, you will realize and understand what make them special. So what make them special is they inform that they handle for everything from fertility, and major surgery, healthcare. So this make them very unique lah. Next, you will see their starting point, that you learn that they are one of the largest private hospital group, and their flagship hospital in Sunway City. And you know what this Sunway is the ranked number one and the largest private hospital in the Malaysia. Simple meaning, you are not investing in the if you apply for this IPO, you are investing in already well-established leader. Like I said lah, the influence, the one of the factor that influence the market for the external factor is the market leader. So I can say Sunway Medical is one of the market player in the hospital market lah. And also you are not investing to the unproven startup. So it is a biggest IPO, so it's a better growth. So it's very worth it lah for you to study. And next we go for the next point is the financial statement. So normally for the financial statement, I will study about their financial health lah. For example, I will use the revenue compound annual growth, or we call it CAGR, to find the better revenue growth. So for this part also, I will compare for the revenue and the profit. So we go for the CAGR first. The revenue CAGR show. So I'll give you the simple meaning of the revenue CAGR first. The revenue CAGR show how fast a company's sales have grown over the last 2 or 3 years before it goes public. It's that investor if the company consistent lead a trend for the growth of the revenue. So a high CAGR suggests the company is successful capturing more customer year after year, so making its growth start, and I can say it's a good and worth buying lah. So my personal opinion for the CAGR is around 20 or 40%. So I attach for you is the CAGR formula. So how to find the CAGR is you need to put the ND value. So the ND value is the uh beginning value on the for the for the years lah, and the ND value for the years and the beginning value, and then this is the formula. So I have a simple way for you to uh to calculate this. So how to calculate? So I show to you first. So you need to search CAGR calculator, and then just click for this page. You can also use for the other apps also lah. If you convenient more for this, you can use this lah. So like we are using the Sunway Medical as example. So for this calculator, you just need to put the starting value and the value and the number of period. So how to insert it? So I help you I will teach you step by step. First is for the revenue, because we want to see the consistently trend of the growing for the revenue year by year. So on this prospectus is stated for the financial end is starting from 2022 and the ending for the 2024. So I will put this figure 1064788 at the starting value. And then for the ending value is the 1.852462. Okay. So normally what my observation, there's a lot of people are mistake at this part at the number of period. So you can see we are comparing from 2022 to 2024. So 2022 to 2023 is a 1 year, and then 2023 to 2024 is 2 years. So basically we try to see the trend for the back 2 years lah. So at this part we put 2 years and then calculate. So we can see the CAGR for revenue CAGR for this Sun Medical IPO is 31.9%. So what what I said to you, my personal opinion benchmark for this revenue CAGR that I normally use is around 20% to 40%. So this CAGR is at this range lah. So I can say this IPO is a very good IPO because they can consistently uh, increase their revenue year by year. So next we see the profit margin. Yeah. Before we see more detail on the net profit margin, we know that most of the company that will list on the Bursa market, most IPO will listed market is profit making company because this is the requirement from the Bursa. So I can say, if you can see, if you are do study, most of the company that we listed is the profitable lah. So we need to find the highest profit margin. But I will put disclaimer: a good margin depends on industry. However, my healthy company is generally is 10% or higher. This for 10% higher for net margin is my personal opinion lah. Basically, for the net profit margin is very depending on the industry. For example, industry is not industry profit margin is not same lah. You can see, for example, technology company, their profit margin is very high compared to poultry. So you can their profit margin is high. So basically, so this basically for the 10% is my only benchmark lah. But it's a good to try it's a good try lah for you to make an analysis to find the better group of profit margin, the high profit margin, because we want to invest in this company that really can make the profit. So based on this one, we can see we can go look at I look for the profit before tax margin. So you can see their profit margin is around 23 to 60%. I can say it's a decrease, but it's still in the range. So I can say this is a good company lah. Next to identify the company, I also use the gearing ratio. So what is the gearing ratio? Gearing ratio is measure how much of the company's operation are funded by debt versus their shareholder equity. So the benchmark for the gearing ratio is below 0.5 times is considered low risk, and 0.5 to 1 time is considered medium risk, and 1 to 2 times is considered high risk. So we can see I still take example of Sunway Medical. I will still use the Sunway Medical as example. So you can see the net gearing ratio is below 0.5%. So it's considered this company is very low risk lah. So it's good to look for. Next, we look at for the current ratio. The current ratio. So what is the current ratio? Current ratio is measure the company ability to pay off its short-term debts. due to within 1 year using its short-term asset like the cash, inventory, and account receivable. So for the benchmark for this current ratio, if the company for the if the company have their current ratio more than 2 times, is considered low risk. If the company current ratio is between 1 to 2 times, is considered medium risk. And if the company uh, the company if the company current ratio is below than 1, is as considered high risk. So we look for this for the picture that already attached. This is from the Sunway Medical prospectus. You can see their current ratio is whereby 0.9 to 1.3. So for the for year end 2024 is 1.3. So I will consider is medium risk lah. So it show that uh, the company can pay their short-term debt. Next, we go to the utilization of proceed. So basically, I already mentioned that they are going for the IPO because they want to get the fund from the public. It can be to expand their business, debt repayment, and etc. So for the utilization proceed, you can see whether this IPO is using their fund properly or not. Whether you can using their fund to make a expansion of their business. It can be the growth factor lah. So for the growth factor, you can find it's very easy. The use of fund must be directly toward growth initiatives such as building new factory, purchasing machinery, expanding operation to other region, and many more. For example, the Sunway Medical, you can see that they are using the fund to expand their business. So they are sure that they want to make the expansion of the existing hospital. Like for the example, they want to use the money, public money from the IPO to increase their bed capacity. So you know that there is if the hospital have a lot of capacity, I mean the beds, so it can increase more. It can welcome more patient to visit for the hospital lah. So it can make them to make more profit and get the more revenue in the future. So the higher the percentage allocated for the growth factors, the greater the company potential for sustained expansion lah. So we go for the next. For next one is the debt repayment. So I think a lot of the people assume that if the IPO using the fund to buy to pay the debt is not a good IPO. But you need to understand first what are the purpose of them to use the money. Why are they paying the debt? It can be, for example, if the debt is used to expand the company business, for example, purchase factories, machinery using credit before listing, meaning to say, they use they make the loans first to buy, for example, to buy the machinery to make a new office, and then after that they are going to listing, so it makes a good green flag for the IPO because they are not using for the what we call it, the bad one, like the bad using the IPO to the unnecessary item like the unnecessary item like to pay to use the money to what we call it to make the waste of money lah. So next we go the last criteria is the PE ratio. So what is the PE ratio? PE ratio is the price to earning. It is indicate how much you pay for each RM1 of the company earning. So the PE ratio serves a comparison to determine whether is a stock is overvalued or undervalued relative to its competitor in the same sector. So basically, if want to find the PE ratio, you can you can just open the prospectus and search for the best seat of arriving of the IPO share. So you can see for this one, for the IPO Sun Medical, their PE is around after including their future planning, their prospect is value about 64.8 times. I can say is quite high lah because the rule of thumb of the IPO is only 15 times. So, but you need to know why this IPO is trading in the high PE. So I give you the view. So you can see this is the what we call the peers for this Sunway Healthcare or Sunway Medical. So there's these two peers is IHH and KBJ. So you can see their revenue if compared to Sunway Medical, Sunway Medical is the lowest, but you see their revenue CAGR. The revenue CAGR for the Sunway Healthcare is more higher than IHS and KBJ, meaning to say their revenue CAGR is, I can say, double lah from their peers. So that's why their valuation for 64.8, I not say it's cheap, but can attract more investors because people believe that if this company can make this growth for this year, how about next year? So they believe they can make more profit and more revenue for others for the next years lah. So let's say if they make it come this dream come true. So their PE will be will be adjustment and will be lower lah. So next, by the way, there is by the way, how to determine if an IPO is undervalued or undervalued compared to peers and industry. So this is the simple way to analyze peers of PE ratio lah. So first, you already know their peers if you see the IMR report. So this I find it from the IMR report. And then you must get their PO ratio. Peers PO ratio. So to find the PO ratio, you may use the stock screening services app lah. So for in this case, I will show you from this app screener, Galaxy Screener. So first you need to search Galaxy Screener and then open for these apps and then search for the KPJ, because KPJ is one of their peers lah. And then you can see their PE is 42 times. So for the Sunway Medical, their PE is about 64, right? So I double check for you. So if we compare to the KPJ, PE ratio, it tells that KPJ is more undervalued than Sunway Medical lah. So for now, we know the P ratio for the KPJ is 42. So to find to compare what we call whether this company is overvalued based on the sector or not, we can find their median PE lah. So you can use I can show you how to find the median by using this app. So we can see their PE is 42. So now we search for the other peers. So other peers for the Sunway Medical is the high ISH. So we find the IHPE first. And then you will know that the IHPE is about 37.77. And then you put this one. You put this amount there, and then you calculate. And then you know that median PE for this sector after we combine the IH and the KPJ is 39.885. So the Sunway Medical PE is about 64.8. So it show that this IPO is what we call it overvalue. But like I said lah, sometimes people are still buying wherever the PE is high because their belief in this IPO is very high, because they are expecting that this company can make more profit for the next quarter report. So that's why can boost confidence for the investor lah to look for the this IPO. So this is the simple notes that I do to find to analyze the PE ratio. Normally, I determine whether it's the good IPO or not. I see I will make sure that IPO PE is below than median PE. So meaning to say, let's say if the company that I study, the PE of this company is 10, meanwhile their median or peers median PE is around 20, so I can say overvalue. So it so it will take 1 point lah it's like a wow factor lah for this company. So I will go to, because I want to find the cheap one and undervalue one. So if the IPO PE is high than median PE, so I can say this overvalue. But but I need to study a bit what make their PE so high. So let's say if there is no reason stated, so I will not pay high hope for this IPO lah. For example, for this Sunway Medical, I still look for, because I can see their growth compared to their peers is really high. I can say it's double. So next, from the P also, we can do the industry analysis also. So industry analysis is one of the important criteria. So a company sector performance is critical factor in the evaluating an IPO. Industry growth can be rapid or sluggish depending on the both local and global economic condition. So market trend, for example, current geopolitical tension in the Middle East involving the US, Israel, and Iran have shifted the market focus. Consequently, the oil and gas sector has become a hot sector as investors react to potential supply chain. So meaning to say, industry a good IPO, a good let's say if this IPO is in a good sector, is a good to look to you for the study lah. For example, I give to you the example. Last time we see a lot of the data center related IPO listing, right? For example, like the Chiding, ISF, and many more lah. So most of in the prospectus is stated about the um, data center related. So at that time, data center related, data center, the AI data center is one of the hot topic that are people around the world are talking for. So when it's related and then get many project from the for the data center company, so it will have a good sentiment lah. So that's why you can see the price movement of for those IPO is really good, can reach 20, more than 20% and above lah. So I think that's all for me. Let's say if you want to, let's say if you want to more update for the IPO, you can follow to our social media. So at there we will post and make announcement lah if there any IPO will be listing, and we also do the summary for the IPO. For example, I will show to you. So this is one of the IPO summary. So this one is the Empire Sushi who that's closing by today. So at this post we also we will tell about this market summary lah. It's based on the criteria that I told you what I use to find the good IPO. I also have to summarize so you can decide whether it's a good IPO or not. So for the main business, we already stated, and you can see their revenue in the illustrative way. So it make it easier to you to find without reading 100 of the prospectus. For the financial one, for the PE ratio, we already stated, and the revenue CAGR we also stated. So it's really easy for you lah. Net their big picture for the IPO, and then the utilization of proceed, what the money will use for the IPO, we already put in this illustrative way lah to make you easy to understand. For the peers also we also provide, and the peer comparison we also provide. So you can see, like I said to you, if the disclaimer, this is not for the buying call or buy call purpose. So you can see the Empire Premium Food out. All will know is Empire Sushi. Their PE is around 20.3%, and the median PE is 29 times. So you can say that Empire Premium Food is undervalued compared to their peers. So it's a good factor lah, and is very worth to look for lah. And then, so what make the good for IPO, we also put at this highlight lah. So for example, shift consumer habit, low barrier. So is this what you need to focus on, what this make IPO good, or maybe what makes IPO not really good already? We already provide to you at this highlight. So you can follow all our social media lah. So is there any question? You may ask, or maybe you can, let's say if you want to ask more detail about IPO, you can scan this QR code and go directly to our WhatsApp. So our dealer will contact you lah. So if you inquire about the IPO, you just ask. So we will happy to assist you to give you best investment for the IPO. So if you have any question, just inform me. So I will help you. So if no question, end this webinar and for this webinar lah. So see you. Bye bye. Thank you.